Okay, good morning, guys. My name is Gavin. Welcome to Alphachain's weekly market brief. It is the 28th of March. So final week of March. I think we've got how many trading days remaining? We've got 4 trading days remaining, and the Friday is the 1st of April, where we have non-farm payrolls on the first Friday of each month. But let's do this. Let's start with last week. What happened last week? We'll touch on some key points from sort of some of the key macros from last week, and then we'll look at the week ahead, and then we'll come over to some of the technicals that you need to be aware of. Let's start with the economic calendar. Let me just bring it up on the screen. Okay, just a rundown from last week. Let's make sure we're on the right page. Last week, yep, there we are. Okay, as previously mentioned from last week's weekly brief, that the focus is going to be largely around the Ukraine-Russian situation. But in addition to that, we had, of course, a lot of speeches, a lot of central bankers' speeches taking place. And the third key pivotal part to some of the macros was specifically in the UK anyway, the spring statement. Okay, so the Chancellor of Exchequer's spring budget statement. So those are sort of 3 key elements there. So let's start with some of the speeches, right? The most notable speech was, of course, Fed Chair Powell, who came out last week suggesting a more hawkish tone than from when he raised interest rates by 25 basis points. So he's given indication of potentially 2 further 50 basis points rate hikes in the upcoming meetings. Okay, so he's given a very strong indication that they may not raise only by 25 basis points, that they could actually raise by 50 basis points at 2 upcoming meetings. That's a very hawkish stance. So we're seeing the continuation of central bankers giving us or potentially accelerating their rate guidance going forward. So they're accelerating the rate guidance. Now, we know that the Bank of England has raised rates 3 times. Now, the Federal Reserve has raised their rates for the first time in some years, some number of years. I think it's 2018, 2019. And seeing this morning money markets, how they're now pricing in 4 rate hikes by the ECB. The question is, are they tightening too fast? Are they tightening too fast? Now, why mention that? Why am I mentioning that? Well, it seems like there are 2 elements to this now, right? Now, on the short-dated interest rates, central bankers control that, right? They control that by raising and cutting interest rates, right? On the long end, they do have a little bit of stimulus where they can use QE, right? But the vast majority of it is decided by bond investors. So there is now a discrepancy between the 2. We're now seeing yields, the 2-year and the 10-year yield curve invert, which means that the 2-year interest rate is greater than the 10-year interest rate, right? And that's an indication that the long-term bond markets or bond investors are pricing in that the Federal Reserve are hiking rates so aggressively that it could cause a recession, right? Because generally, when the interest rate yield curve tends to invert, it's an early indication of a potential recession. I will show some charts on that a little bit later in a different webinar session, but just note that in the last week, one of the most pivotal points that was coming out and was clear was that 2 and 10s inversion, the 2s and 10s bond yield inversion, and how that's an early indication of a potential recession. As now we're seeing a discrepancy between how bond investors see the markets and how central bankers see the markets. Central bankers are clearly very hawkish in comparison to bond investors. So that was the most pivotal point from last week's session, right? We did also have CPI in the UK. Okay, CPI came in at 6.2%, the prior being 6%. So CPI is only gaining in the UK, which is inflation, guys. This is year-on-year figure inflation, right? Excuse me. So yeah, another bull run in our inflation levels in the UK. Moving on, continuation in speeches. We had the BOE Governor Bailey speak, but again, nothing significant came out of that at all. But what was in focus on the Wednesday was the spring statement, okay, the annual budget discussion that takes place twice a year, once in March and once in October. So, you know, there were some introductions. There were some introductions by Rishi Sunak, who's the Chancellor of Exchequer, the Finance Minister. I'm not going to touch on those specifically. I might touch that on a separate webinar where I can show you some of the sort of three or four key changes that were made. But again, that's not going to be too market moving or too market relevant. We're just seeing that what is the balance going to be, right? We're seeing that as we go into now the month of April, one of the fears in the UK market is that energy prices are going to soar. And if that's going to take place, we want to see that the government is doing something to help individuals. So one of the key points was that the reduction in fuel duty in the UK was reduced by 2 pence to the pound, right? So there were sort of other key elements there. Whether you like it or don't like it, you agree, you disagree, that's to each individual. But there were a couple of adjustments made in regards to the UK government tax regime. Let me just admit someone in. Fantastic. Okay, so moving more towards the macro. Yeah, just be mindful of, I'm just potentially looking at crude oil inventories as well on the Wednesday. Every Wednesday we have US crude oil inventories came in at minus 2.5 million barrels in comparison to minus 0.7 expected. So yeah, but again, nothing significant there. Moving through, again, mostly speeches. You can see speeches. And I think Thursday was the day of PMI. Okay, Thursday was the day of PMI. And just looking at sort of a holistic standpoint, anything above 50, okay, anything above 50 means expansion. Okay, above 50 is positive, below 50 is negative, is contraction. Okay, so what we want to see is, one, we want to be above the 50. The second is we also want to see in comparison to where we were the previous month as well. Okay, so those are two sort of key elements when it comes to PMI data. And across the board, you can see mostly positive, except for one over here. So for example, the UK flash manufacturing PMI came in at 55.5. It's still expansionary, but not as expansionary as it was in the prior month. That's all. Okay, so not much of a significance there. But across the board, flash PMIs overall came in quite positive overall. Okay. Friday, as we end the previous week, a lot of the sort of the focus was on, of course, the University of Michigan State consumer sentiment. Mostly, again, anything above 50 is expansionary, so it's positive. Yep, so it came in at 59.4, so that's sort of the key elements from last week, okay? Apart from that, I don't take too much away from there, right? Just apart from the speeches, we had some CPI inflation data in the UK. We had the spring statement from the UK Gov, as well as, of course, the PMI data, right? So there wasn't a lot of macro. The rest of it was around the Ukraine and Russian situation. Now that is continuing in the background. There is no stopping what's taking place in Russia, what's happening in Ukraine with Russian invaders. But it seems that, you know, there are making moves in the right direction when it comes to peace talks and a peace treaty in regards to sort of their meetings, ongoing meetings that are taking place. It seems like Ukraine have given a lot of concession. For example, one of the key concessions is the fact that not being part of NATO. Okay, so that's been completely taken off the table. But it seems like Russia also wants the Donbass area to be part of Russian sovereign. So let's see what takes place and unfolds from the Russia-Ukraine situation. There were talks over the weekend, for example, US President Trump, why am I saying Trump? US President Biden was over Poland, I believe. So he was in Poland, meeting with the US troops that are based there, as that is a NATO country. And yeah, there was discussions of nuclear, right? So the nuclear discussions as well. So, I mean, it can go sideways very quickly. It can go sideways very quickly, and just be very mindful of what's taking place from a geopolitical standpoint on a global scale. Okay, there were discussions of the EU, the European Union, discussing an embargo on Russian oil. Again, nothing has specifically emerged around this, but there could be within the next day or two more indication if that's taking place, right? So yeah, just be mindful of any ongoing Russia-Ukraine news. Let's have a look at this week. Let's focus on this week. Okay, we got BOE Governor Bailey to speak. Remember, we've shifted back forward. I mentioned this a week ago, 2 weeks ago, that the time for the US Open would be at 1:30 UK time. It's now switched back, it's an hour forward, now 2:30. We're back to 2:30 p.m. UK time for the US markets to open. For the week ahead, now let's have a look. So Tuesday, mostly low impact news. We have the JOLTS job opening. Again, I don't see that as significantly relevant when you've seen the jobs market the way they are. Going on to Wednesday, we have ADP non-farm employment change. Thursday, again, mostly low impact news. We've got some Canadian data and core PCE price index in the US. But apart from that, nothing significant. Now, what I would say is on the Thursday, on the 31st of March, expect a bit more volatility. Okay, do expect a bit more volatility, especially in the Forex market. Because we're not only at the end of the month, but we're at the end of the quarter. And that allows for a lot more volumes to come into the market for traders, investors, businesses, all looking to close their books, readjust, rebalance their portfolios. Okay, so we could see around the fixes, a bit of volatility that may come in on the last day of the month because it's the last day in the last quarter. Sorry, not last quarter, the end of the month, end of Q1. As we head into Q2, 1st of April, we will have average hourly earnings, non-farm employment change, and the unemployment rate over from the US. We still have also some PMI data throughout the trading session. Yep. And then do remember, we're going to go into earnings season, right? So we'll have earning reports being released from as soon as this Friday, but the vast majority will be from the following week. Apart from that, I don't see anything else to keep an eye on at this current moment. Let's have a look at some of the markets. Just give me a moment. Let's shift this over to there. Right. So looking at the markets, we'll look at sort of US markets first, and then we'll go over to European markets. We'll look at gold and oil, and we'll come over to the FX markets, and then we'll switch over to some of the crypto assets. So we'll look at sort of all key markets. Now, looking at the S&P 500, we've seen a very strong recovery. A very bullish tone taking place. The next key level resistance is 45.94 handle, right? And it's very bullish. It's a risk on environment. That's what we're seeing. So risk on environment. Surprising with everything that's happening in the background. But remember, the markets are discounting information in the future, right? So we're discounting. It's a discounting mechanism, right? We're not thinking about, oh, markets are bullish today or markets are bearish today. No, they're forecasting, hang on, markets may look better in 3 months than it does now, right? We may see a treaty being built by the Ukraine and Russia, and so there is a lot more positive sentiment, certainly, especially in the S&P 500 that we've seen, but we're not quite at that resistance level yet. Okay, so prices continuing to the upside. The Nasdaq is following suit, slightly on the slower pace. It is lagging considerably in regards to what we saw with the S&P 500. But yeah, we're sort of moving in a bullish direction. We are certainly moving in a bullish direction. The next key level of resistance is going to be this level here, which is the 15,267 level. So yeah, resistance, right? So support, resistance. That's the next key level that I'm looking for, right? Where that significant sell-off to test this region of a greater pushback, and then the next level of downtrend. So this will be sort of the next key level of resistance. You can apply a bullish uptrend line. We are on the 4-hour time frame, so slightly higher time frame. So just be mindful of that as well. Yep. Let's remove that. Okay, switching over to now the FTSE 100. FTSE 100. Now looking at maybe the weekly time frame. This is what we've seen so far, right? Where we're very close to those all-time highs. all-time high, if you're looking from a closed perspective, is 70,800. If you're looking at sort of the highest region tested intraday, 7911 in that region there. So we are back up to this key level resistance and this downtrend line that I have in place. The question is, are we going to continue to break out to the upside? Okay, so just be mindful of that. We had a bit of a pullback, consolidation, and now we're about to break the prior high in Monday morning, Monday open. Yep, you can see apply a resistance line just on this prior high over here, wait for price to break through. That could be a trading opportunity just there. Moving on, let's just maybe apply that line now. So just looking at the 4 hour, I might do that with this level here. Okay, so that's the sort of the key level that I'll be looking to test. Please look to apply alerts. What you can do is you can set an alert to this, right? So let's have a look. Text coordinates, where are the alerts? Pretty certain you can add an alert to this, or am I mistaken? Okay, all right, okay, so you just click on the plus over here, this region. Let's drop down to the 30-minute time frame. Looking at this high here. We want to have an alert potentially just there. Add alert. Okay, so for horizontal lines, I mean, you just hover on the where the price line is, and you click on the plus over here, set an alert. Look to aim to set alerts. The good thing is with TradingView, I've got it on my phone as well, and it notifies me on my phone. So, okay. Switching back over to the DAX, let's have a look at the DAX. Move up to the higher time frame. Okay, so we're fast approaching this trend line that I've got in place. It's a clean trend line. I mean, there's no closes above this level. A couple of spike throughs that I'm okay with, but you can see how price action has consolidated in this region. Price has consolidated in this region. Now it's breaking to the upside. Okay, so we have a break to the upside there. Moving to the 4 hour time frame. Yeah, look at that beautiful range, right? Beautiful price action range being formed in this region here, right? In this. Let's see if price continues in this region here. I need the break through this region. Okay, so not only do I need a break through the trend line, downtrend line, but to confirm it, maybe this key level resistance that I've highlighted as well. So let's see what price does in this region here. But having this range, this could be something that you could focus on as well. Maybe setting an alert back above the 40,600 figure, somewhere around this region here. Yep. Okay. Let's have a look at gold. Gold back down to the downside, right? It keeps moving lower now. We had the initial breakout to the upside. We broke that prior high. So we have, if you just look at price action, right? We consolidated around this region, around the 1920 handle, right? 1920 handle. And then we saw the first sort of, low being formed here. And we have a higher low in this region here, right? The high was this region here. Okay, so we've got the low, the high, higher low, and that's the next higher high, right? So now we've got a higher high, and that's where you can start to apply your trend line. But it seems if you now apply that trend line, if you apply it, I don't need to use that. Let's do that. If you have this trend line in place, that's what it looks like. Okay, so that's the trend line in place there. And it seems like we are about to breach through this trend line at this moment here. So there's a little bit, as you can see, flows, the way flows operate, the way flows are moving at this moment, it's based on sort of, risk on and risk off sentiment, okay? And when it's a very risk on positive sentiment, you're going to see gold not do so well in that environment, even with hot inflation, to be fair. But those are sort of the key points to take away from this. But again, we might see a bit of consolidation here, and then we might see the next leg higher, right? Switching over to oil, US oil. Okay, we see a continuation to the upside. We're seeing a continuation to the upside. And what was this upside move? Well, the first thing is we know that Russian oil is being banned. It's been banned by the US. There is discussion of an embargo by the EU. We're seeing a lot of other countries finding alternative ways of sourcing their oil. So clearly, we're going to see a lot less demand from for Russian oil. In addition to that, we had in the manufacturing sector in China, Shenzhen, 30 million individuals going to lockdown. A lot of manufacturing takes place there. A lot of oil demand is required, so there's going to be less demand for oil there, and that's why we saw sort of a bit of a sell-off and then a bit of recovery with the embargo. So this is a China sort of lockdown, and this is the sort of EU embargo that's taken place over the last couple of weeks. Now, price seems like it's consolidating, and this I continue to believe that we may see a continuation of sideways trending until new catalysts come into the market. But is there a pattern that you can see? Is there a price pattern you can see? Put it in the chat. What price pattern do you see? Do you see a 4-hour price pattern? What type of price pattern do you see? Let me know, guys, if you see a price pattern. I'll give you a minute or so. Put it in the chat, guys. Put it in the chat. What am I looking for? That is correct, guys. So we're seeing a head and shoulder formation, right? So something like this, that's your left shoulder. It's the head, right shoulder there, right? Excuse me. So we are seeing a head and shoulders pattern, right? So I just want to take one more key point over here. Let me just take it from the neckline through to that. And the breakout, if we look at the breakout sort of being through here, right, that takes us back down to around the 102 handle, 100 handle. Okay, so we could see a correction back to the 100 handle before we have the next leg higher. Something worth noting is the prior trend is not as significant either. So there's not a very strong prior trend in play, but this is a very clean pattern that can be seen here. Okay, so with WTI. So yeah, it may not get down to the 100 figure. We might sort of see it stall around this region here. It might be wise to take 80% of the MPO. Take 80% of the MPO. Okay, let's switch over to some of the other markets. We'll have a look at the FX markets before we transition on to cryptos. Give me a moment. Let me just. Okay, something that has been outstanding is the weakness that we've seen in the yen, and it's something that I had shared in the chat itself. So coming over to our chat, have a look at the discrepancy that we're seeing here. So the strongest currency is Aussie. Aussie is the strongest currency at this moment, a commodity-based currency. So we're seeing commodities outperform substantially, and that's why we're seeing sort of Aussie on the upside. And we have US dollar there as well. So a lot of dollar strength coming through with a potential rate hike guidance that's provided by the Federal Reserve. But the weakest currency is the yen. And the yen does really well in markets when there's a lot of risk off. When there's a risk off environment, we're going to see a lot of yen strength coming through. But not recently. I mean, just looking at sort of some of the overnight sort of markets for here, you can see we're seeing a lot of yen weakness. So the market is in a risk on mood. It is overall in a risk on mood. So a lot of yen weakness. And with that yen weakness, we're seeing, if you're looking at currency strength-wise, please switch over. Look at the dollar yen and sterling yen. Okay, both are moving substantially in a one-directional move. Now we're now seeing, if I switch over to the daily time frame, this is what we're seeing in the dollar yen. What a move, right? That we've seen in the last, a couple of weeks. So when's this from? The breakout was in this region here. The breakout was on the 11th of March. Okay, so 11th of March. That's taken us back at least, 2 weeks. Well, yeah, 2 weeks. So 11th of March was on a Friday. And then from that point, we just had a continuation of this bull run. So not only did we broke the prior highs around the 116 handle, look how many handles we are, right? This is sort of, a 800 to 900 handle sort of movement that we've seen in a very short period of time. Now, we've broken all sort of prior key levels, the 118.65, the 121.75. Let's maybe switch over to the sort of the weekly time frame. We're now going to test this level of resistance potentially, the 125.86 handle, right? So let me just make sure that I have my resistance line in place. Yeah, and looking at the weekly time frame, look at the the 4 candles, the 4 candle movement that we've seen here. So the next key level of resistance is the 125.88 handle. Switching down to sort of the lower time frame, on the 4 hour time frame now. So, I mean, we've just tested the 125 handle. Okay, 125 handle for the dollar yen. Similar to sterling yen as well. Sterling yen now testing that key level resistance. Let's see where that resistance level has been prior. Okay, so that's sort of the key level resistance that we've highlighted, which is the 163.96 handle. So just looking at another position I have. Okay. Right. So yeah, 163. We failed to sort of close above this handle as of yet. So look at the daily as well. Daily's not closed above this handle. Nor the 8 hour, nor the 4. Well, the 4 hour just pinched above it. Just pinched above it. A little bit of rejection coming through. You know, that's around the 164.50 handle. Okay, so we're going to test 164.50 handle. And we're seeing a bit of a correction occurring on the potentially lower timeframes. So just be mindful of the move that we've seen. We had this key structure at this moment. Okay, looking at the cable. Let's look at cable. Cable's still moving to the downside, right? Cable has still been moving to the downside. So this trend line in place. This is a counter trend line against the sort of current trend that we've seen. So we've seen an overall downtrend, looking at from a price structure standpoint, right? Right. So just to sort of explain that, so where we have, where is it? We got that high. From that high, we've gone on to sort of test this low. Let's put it down to this low here. And then we said a large pullback consolidation, test 3 times this key level resistance. So 1, 2, 3 tests there in this region. And then we've gone on to sort of break the prior low. So first tested that prior low, pull back slightly, then breach through, another pullback, another breach through. So very key level of support there, right? But the key point being is once we got to this support, we didn't have much of a correction. We had a bit of a consolidation and then another break lower. Okay, so not a prior high as significant as what we've seen with this recovery here, making this new low. And that's the next level of resistance. So you can see how this zone here came into place. So markets came back to test this zone. Oh, that's not the one I'm looking for. So it came to test this zone, and now it's breaking lower. It is certainly breaking lower. We could see price action potentially coming back to the 130 handle. That's what we could be seeing, is price action coming back to the 130 handle very soon. Now, looking at sort of the weekly time frame, what does that look like? Something like this, right? So got this counter line in place. We had a gap lower, a small gap there, tested this low, bit of a bullish run, rejection, and now this could be the bear move. Okay. Daily, yeah. So yeah, this is sort of the key level that I identified sort of on the higher time frames anyway. Okay, switching over to euro. Let's have a look at euro. Maybe look at the weekly time frame. Now, this is sort of the key level that I keep highlighting with you guys, right? And you must have this on your charts as well, this trend line over here. Okay, so very relevant trend line. We've seen already rejection of this trend line. We've seen a bit of a bullish sentiment coming in, maybe a repricing, retest of the 111 handle. It seems like it's rejecting that level so far. Switching down to the daily. So you can see price tested this low, pullback, most of it moving sideways. It hasn't quite closed through this handle, which is the 109. No, it's not even highlighted. Hang on. Yes, this level being around the 109.62 handle, 109.62 handle. Breach through it, pull back above. Yeah, I mean, if you're looking at sort of how price action is moving at this current moment, I mean, you can see there's a bit of consolidation in this region here, right? So there's consolidation in this region here, bit of a false breakout, retest, and now we're potentially looking for the new low to come into place. But again, more to the bear side. We're seeing a lot more dollar strength. We see some euro and sterling sort of in the midpoint, but the best trade at this current moment, without a doubt, is certainly looking at dollar yen, even sterling yen. Have a look at Aussie yen. That will be one chart to look at, is Aussie yen. As we've seen, Aussies that outperforming currency at this moment. Okay, look at the DXY, the dollar index, consolidating at those highs, close enough to the 100 handle. We're at 99.25, still moving to the upside, Okay, so we can still see price action moving to the upside. but not quite at that high end either. Okay, so we've still got some room to the upside in regards to the most recent resistance and the trend line in place. Yields, look at the 10-year yield rising, but not as rising as quickly as the 2-year yield, as I mentioned, in regards to the inversion that we've seen from last week. Okay, yeah, VIX is moving lower in regards to currencies, if you're looking at the fair in the market. So yeah, I mean, it's not specifically for currencies only. The VIX this is looking at the S&P 500, the volatility index. And it's just giving us, is there a lot of fear in the market? It just doesn't seem like it is, right? So it's retreating. We're back below the 25. We're around the 21.95 handle, okay? And you can see how the currency strength over here. I've got the dollar, euros, sterling is the one that I focus on there, sort of in the midway point over there. But the weakest is the yen at the bottom there. Okay, switching over. Let's switch over to crypto markets. Let's give me a moment. What screen is that? Oh. Okay. So yeah, I mean, over the weekend, we've had quite a bullish move. Okay, over the weekend, we've had quite a bullish move. So just looking at, for example, Bitcoin, this is what we've seen so far. So we've had the break out of this recent consolidation phase that we've seen. Okay, this is the first time we've broken above the 45,000 figure. We're testing around the 47,000 figure at this current moment. You may see a bit of a correction, a bit of a pullback occurring, but that's a very strong breakout. Okay, we've had a very strong breakout. Now, this is going in line with the flows. Remember the flows, right? So go back to when we are in risk on mood, we're going to see more of an upside movement to the crypto space. Okay, so this is not an inflation hedge as of yet. That will come with further adoption down the line later on in the future. At this moment, all we're concerned about with Bitcoin is, risk on, risk off environments. In risk on environments, you're going to see a lot more money flows going into cryptocurrencies such as Bitcoin. Okay, so Bitcoin's broken back above. Let's move this lower. ETH is also moving in the same direction as a very positively correlated asset it is to Bitcoin. And yeah, we're testing the 33.25 handle. The next key level resistance is that 34 handle there, right? So that's that region here. So 3,400 figure is the next key level resistance. We may see a bit of a consolidation or a bit of a pullback for the next leg higher, but we're moving in the right direction. We're in this consolidation phase. If you look at the overall bigger picture view, we're testing the upper resistance barrier. Okay, once we break above that, then it's all bullish, and it's very, very bullish at this current moment. Okay, I think that's a wrap. That covers all sort of key assets that I tend to look at from a day-to-day perspective. We've gone through some of the fundamentals. We spoke about the week ahead. Keep an eye on incoming information. The first one is, of course, we've got this new Omicron variant, a new version of that variant, which is extremely, it's rapid, it's spreading very fast. And we've seen how 30 million individuals in Shenzhen, China, have gone into a lockdown. That's impacted the oil markets for a short period of time. At the same time, we've got the Russia-Ukraine situation. So a lot of geopolitical factors there with COVID, as well as the invasion. At the same time, keep your focus on central bankers, okay? Keep the focus on central bankers in the upcoming week. Any pending speeches. Something that I'm going to be looking at, for example, is the end of month flows. I want to see how much volatility comes into the market at the end of this month, because what that's going to do is it's almost hit a reset button, right? We're hitting a reset button, and individuals and portfolio managers, they're going to align their portfolios based on how they see the markets for the upcoming quarter. Right. So, is there going to be more flows going into risk on assets is something that I'm going to be monitoring. Right. Yeah. And I think that's about it, really. Just be mindful of non-farm payrolls at the end of the week. Expect volatility on the 31st, and earnings season begins from next month. And something that I had seen recently, and I spoke to someone about this, one of the research that I tend to carry out on an ongoing basis, one of it showed that if you're looking at Bitcoin and its performance by quarter, right, what's been the most outperforming quarter? And generally, it's actually been Q2 and Q3. In the months of Q2 and Q3 is where you see Bitcoin outperforming. And the worst quarter tends to be Q1 then it's obviously Q4, right? I always assumed it was Q4. But yeah, all we tend to see is that last little bit eco bull run that occurs. And that's the mass euphoria that tends to take place in any asset class that bubbles up to the top side, right? Everyone's getting in, all media attention is on Bitcoin. But the bulk of the run tends to occur in Q2 and Q3. Q4 is just the tail end, right? So does that coincide with miners, how they operate, and they need to be tax efficient? And that's why we don't see Q1 as a very bullish run? Maybe, right? Let's see. Let's see if Q2 is better for the crypto markets and just ongoing risk on, is that going to be a continuation risk on environment? But hey, with what's going on with Russia and Ukraine, the type of rhetoric that I'm hearing from from global leaders, it can go sideways very quickly. It can go sideways very quickly. So be sharp as attack. Just ensure that you're keeping up to date with incoming news. Fantastic. That brings us to another conclusion. Okay, thanks for joining in. I'll take some questions, no problem. You can ask those questions now, but let's end the recording and we can go to the Q&A section.